Good morning and welcome to Market Day Report. I'm Chris Swift, and it is the last week of the year, so if we're going to get anything done, we better get in a hurry for it. Let's take a look and see what our markets are going to open up at this morning. Overnight trade in the corn market looked a little bit soft this morning and kind of still is. I got March contract down 1.5 at 481.5, 80 the low. May down 1 3/4 at 493.5, and out to the July contract down 1 1/4 at 503.5. Our soybean market was a little bit mixed this morning and is still kind of, I got Jan unchanged, up a penny, 13.16 3/4. March unchanged on the day at 13.31.5, and the May contract unchanged, 13.43 even. Let's see, our wheat last week had been really volatile. Down this morning, starting off this week, with March down 8 3/4 at 620.5. May wheat down 9 3/4 at 629 3/4. July down 9.5 at 634 3/4. Kansas City hard red winter wheat down 13 3/4 on the March at 629 even. May down 13 1/4 at 634 1/4, and July down 13 at 638 3/4. And we'll wrap it up with the Minneapolis spring wheat this morning, down 9 3/4 on the March at 721. May down 9 at 730.5, and the July contract down a dime at 735.5. My guest this morning is Brian Hoops. He's with Midwest Market Solutions. And Brian, there's not much we can really talk about for the end of the year here because it's already here. But starting off next year, what are we kind of looking forward to?
Yeah, good morning, Chris. It is the last full trading week of this year this week. So January option expiration is Friday. The first notice day will be coming up in the middle of the Christmas, New Year's holiday. So if you're long any January grain futures, really a good time to get out of them is this week, or roll out of them, do whatever you need to do, because you get into this holiday mode that we're going to be in. It feels like we're in there already. Volume really dries up and disappears, which is what we've seen in the grains so far here, pretty much this month of December. Very limited as far as volume and any real trends of the market. We're very, very choppy. Looks like maybe some of the crop size has been downgraded in parts of Brazil. Still dry weather forecast for that northern Brazil, eastern Brazil part of the country. That's supporting soybeans, but yet good rains and forecasts for southern Brazil, for almost all of Argentina. And they're about 2/3 done with corn and soybean planting in Argentina now, according to the Buenos Aires Grain Exchange. So it's going to be difficult to sustain rallies, I think. And right now, rallies are kind of being sold in this grain market. So that's counter-seasonal, where we usually have a rally from now into the end of the year because basis levels improve, and that helps tighten up the futures market. But we've not seen that this year. It's as I said, just a very volatile, very choppy, not a lot of volume type trading affairs here.
You know, our soybean meal market has been supposedly what's kind of kept the bean market so supported here. It clearly hasn't been the biofuels, with the bean oil being as low as what it is. But we kind of noticed last week the bean meal market cracked a little bit. Does that kind of concern you a little bit that we're kind of losing some steam in that market?
Yeah, you can't really sustain a rally in soybeans unless you have support out of the soybean meal market. So soybean meal technically have done a lot of chart damage. We had a huge rally October into November, and then gave all that November rally back and traded to levels, kind of the October 23rd to 25th lows in that range, finding some support there. But the fact that we gave all that rally back is a real concern, I think, to the trade. And of course, that meal market's looking forward to the crop size of Argentina. Last year, they had a drought crop. We're not able to export a lot of the product out of their country. U.S. stepped in and really took charge and exported a tremendous amount of soybean meal. Doesn't look like that'll be the case this year. It looks like Argentina's going to have a big enough crop. They're going to resume their #1 export status of meal, and the U.S. is going to be kind of a second or third port of origin for meal, and that will hurt our meal futures and consequently hurts our soybean demand.
Well, and it does, and I noticed too that when December went off the board, it was carrying a significant premium to the March contract, January contract. Now that it's gone off the board, January is a little lower, but we're still trading in that $400 range, and not bad a mistake, and that's still pretty expensive bean meal.
It is. Historically, that's a very good price for meal. The trend, however, is kind of telling us that maybe prices are going to get cheaper, and that's what the forecast looks like as far as, looking out into the March futures, into the July futures. Prices do come down in that time frame, anticipating, again, a big crop out of Argentina and a place, little home for our exports. So meal look to slow down considerably.
All right, Brian, certainly do appreciate that. You stay with us. We're going to take a real quick, short commercial break, and we'll be right back talking with Brian Hoops. Stay with us. And welcome back to Market Day Report. I'm Chris Swift. Let's take a look at our livestock getting ready for the open this morning. And we saw that on Friday we closed a little bit higher on the December contract, up 72 at 168.22. Feb was up 142 at 169.35. And April fat's up 127 at 172.85. Our feeder market had put on some dollars as well, up $1.55 on the January at 220.90. The March up 205 at 222.17, and April up 225 at 226.57. And our hog market was strong again too last week, up $1.42 on the Feb contract at 71.90. April up 145 at 78.62, and the June contract up $1.10 at 93.20. I'd like to invite our guest Brian Hoops back on again. He's with Midwest Market Solutions. And Brian, we know that we had a little bit of cash trade at the end of the week. I didn't hear a lot of it, but I do know that we traded some cash.
Yeah, pretty moderate as far as the volumes that we saw. About $4 low on a dress basis in the north, $1 softer in the southern plains, so 170 was about the average trade. Futures rallied on Friday real late in the day. Again, it was a very quiet session, choppy until that last hour of trade in the cattle, and then they saw some strength and rallied. We're pretty much in line with the cash markets and the futures at this time. You look at possibly where we're going to go for the next 2 weeks in the cash markets. We're buying, or packers are buying for a holiday short and kill week next week and the following week. So I don't know that we're going to see any gains in the cash markets. Steady would probably feel like a victory in the next couple of weeks for this cash. And with the short and kill weeks, that should help out the packer margins. They are improving with the cash markets coming down. We've seen about $50 to $59 a head as far as profitable margins out of this cattle complex. So that helps, and that should give us some supportive base in here. So I think we're still looking at higher prices going into that late first, second quarter of next year. The placements numbers in Friday's cattle and feed report look to be down considerably from a year ago, maybe another 5% less than last year, and that's a big change from what we've seen over the last two cattle on feed reports. So there's really a strong sign that the market is setting up for some rallies, I think, going into the second quarter, late first quarter of 24. We just kind of have to get through the next couple weeks first, and I think a lot of people will be positioning from the long side, especially if we get another pullback in the futures.
Well, and I know that we've had a big drop in the market price and everything. We tend to market a tremendous amount of stocker and feeder cattle inventory in the month of January, actually second only to July. You think we'll come out of the chute with the cattle feeders needing to get ready to place cattle for the summertime?
I think that's what they're going to look ahead towards, is that they're trying to use these cheaper prices that they're seeing at the sale barns and still trying to get some inventory around them, and then maybe we'll see some bigger placement numbers next month. So I think you're exactly right. Yeah, that's probably what we're going to see as we go into the spring time frame and then into later parts of the summer. All
right, Brian, I certainly do appreciate you taking the time to be with us this morning.
Thank you.
Hey, it's Brian Hoops, and he is with Midwest Market Solutions. And Suzanne, we're fixing to hear that opening bell, and I'm looking forward to seeing what the price is going to do this morning.
Looking forward to seeing how it all breaks out.
Yeah,
for sure.
It's the end of the year, so
oh my gosh,
everybody's got to get busy.
Swift Trading, are you guys busy? Your company busy?
We have been busy this month. We sure have. So very, very nice.
It's kind of the tail end
of
the year.
It is.
Nice.
We're just trying to not do anything stupid.
Hold on. Thank you, Chris.